There's one simple rule in infrastructure. Bigger usually means cheaper and more efficient. Shipping ports know it, supermarkets know it, and now economies of scale are driving new energy storage projects too. Over the past few years, batteries built in Britain have been relatively small, at least compared to traditional generation sources. We've seen lots of 50 to 100 megawatt projects scattered all around the country. And they've proved a point. Distributed flexible assets can support the grid by stabilising frequency, plug short-term discrepancies between generation and demand. But the current fleet is only just getting started. And if you want a grid that can handle a midday wave of solar, hold it and release it right when the evening peak hits, you need scale. One big, well-run battery could do the job of 10 smaller assets. And that's the bet behind Fidra Energy. Their flagship project is Thor Marsh in Yorkshire, built on the side of an old coal station and reborn as a 1.4 gigawatt 2-hour battery. It's split into 5 equally sized blocks, each able to run on its own and staffed 24/7, designed to function like a traditional power station. And a project this big requires big lenders. Enter the UK government. The National Wealth Fund, Britain's public investor for strategic infrastructure, has taken a major stake in Fidra. That matters. It puts much needed capital into critical projects, sending out a signal to the market. Storage is not a pilot anymore, it's national infrastructure. But is this even necessary? Small batteries move fast. They don't wait for government support or 9-figure project finance. They're nimble, privately funded, and can plug into the grid in days rather than years. That flexibility matters in a system as congested as Great Britain. Ultimately though, and regardless of whether big batteries are necessarily better than smaller systems, scale changes who participates and the speed of deployment. It attracts institutional capital that wants to write 9-figure checks with predictable returns. It creates bargaining power in the supply chain. And it moves the conversation with the system operator from, can you fit us in, to how should we design this block so it solves more problems across the network? And that's the heart of today's conversation with Lisa Mackay, Fidra's Chief Commercial Officer. We discuss her plans for big batteries now, not later. We talk about how to manage the trading arrangements of these new projects, and we explore what it actually takes to turn a former coal site into one of the most consequential batteries on the system today. So, welcome back to Transmission. Let's jump in. Hello, Lisa, and welcome to Transmission.
Thank you for having me.
My pleasure. And as always, let's start off with giving our listeners some context. So what's your background and who do you work for?
So I'm Lisa. I work for Fidra Energy. I'm their Chief Operating Officer. We're a battery developer. I'm new to batteries. My background is all trading in gas thermal assets. So I joined when they brought in the new electricity trading arrangements in 2001. I had a shift trading job optimising large power stations, which I'll still profess is the best job I've ever had.
Okay.
But since then, I've done a variety of jobs in asset management, commercial, public affairs. And now batteries.
And can you still, like members of your family, remember those original power stations you were optimising way back when?
Oh yeah, definitely. Definitely. Okay. We had, they were being built. So when I started, there was one station at Intergen, and then they brought on board another one and another one and another one. So we had all the commissioning, the getting ready, and the systems were like, well, obviously compared to now, they weren't very advanced, but then they were. We were moving away from like DOS. So it was a big step in the right direction.
I hope that people listening know what DOS is, but if not, we'll stick a link in.
They probably won't.
Okay, and Fidra is perhaps quite exceptional in GB at the moment because you are building a very large battery site. Would you like to give a bit of detail around that?
Yeah, so Fidra was started or established in 2024, and that came about because EIG, who are our shareholder, had purchased West Burton B, a gas station from EDF in 2021, and we then sold the operating business. So we sold the operating assets and we kept all our development business, which was all battery storage. So at that point, we established as a strategic investment for EIG, Fidra Energy. So I'd say, although we'd call ourselves a battery storage developer, we have big ambitions to basically build, own and operate about 10 gigawatts of storage across UK and EU, but we are solely focused on large-scale transmission connected storage. So that's our niche.
And what do you mean by large scale?
So I think the absolute minimum would be 100 megawatts, 2 hours. But, as we'll talk about, our sites that we've got just now are significantly bigger than that.
Okay. And what is the first site that you're working on?
So our first major project is Thor Marsh. We reached financial close just earlier this year. So that meant we now have brought in equity to support the building of Thor Marsh and our other projects. And we've also debt financed the Thor Marsh project. So we've brought in 450 million roughly of equity. Thor Marsh itself is a 1.4 gigawatt. So it's pretty huge. We are building just over a 2-hour system there, and it's sort of based in the middle of the country. It's actually on the, it's adjacent to where the old Thor Marsh coal station was.
Okay, and that obviously for people who are sort of like their history in power markets, obviously it's really nice to see the sort of old coal station changing and turning into a battery powered station. So 1.4 gigs, 2.8 gigawatt hours is the size of the site. You should never say that we don't do our research on this podcast. I found before this episode that the Thor Marsh power station was open. It was the first power station in GB to be opened by a non-royal. That's just, whether that's true or not, I don't know. But I like
it's definitely one of the early ones.
Definitely one of the early ones. Let's go with that. Okay, and that is unique, right? At 1.4 gigs, because we don't have battery projects at that size in GB today. So perhaps let's actually just sort of talk about the stage. So you mentioned that the financing has been completed. What is the next stage that the team are working on?
So Thor Marsh is well under construction. So, we have all our appropriate permits in place, our planning in place, we have our connection. So I was at the site just yesterday and it's incredible. Like day to day, you're seeing changes because actually it was a kind of like a horseshoe effect. And what we've done is we've built up all that ground. So now we've basically almost completely finished flattening and raising the site. So the next stage will be that HNMV, who are our electrical partner, they'll come on site and they'll begin all the cabling works and things like that. So they'll probably start in January doing all of those things. And then finally, the batteries will arrive from Sangro, who are our battery supplier, and they'll be brought to site and plugged in and commissioned.
It'll all be tested and commissioned. What is the sort of potential date for that commissioning? When do you think it will be?
So we expect Thor Marsh to be operational, so have reached COD by mid-2027.
Okay. And just because of the size of it, does it go operational in stages? That's a really good question because nobody wants 1.4. It's huge. So what we've done is we've split it into 5 chunks. So balancing mechanism units, as you'd refer to them under the national grids, BMUs. We've got 5 individual BMUs. Now, each of those BMUs have their own meters. They're dispatchable entirely independently. They've got their own transformers. So in a way, it's like 5 little stations. So they'll come on staggered one after another. So the first one will be operational in July 27, and then over a sort of 12-month period, we'll get all the way up. They'll kind of cascade through. Yeah, okay. Exactly. And let's just actually revisit the whole piece around why go large scale. So what is what's the business driver for looking at much larger sites?
I think there's 3 things really. We believe as a team that's our niche. So, if you look at the Fidra and the team that we've got, we're all from large scale, generally gas backgrounds. We've operated, we've built and optimized large power stations. So we think that's our niche. That's what we're good at. There's lots of other people doing smaller scale, distributed, connected. We think this is what we're good at. So it's our skill set. The second thing is we believe that grid needs it. In order to meet their ambitions, we think they need large-scale storage. And there hasn't been very much large-scale built to date. And we think they need that to get over that next hurdle to the targets that they want to achieve. So we believe that grid need it to create that clean grid, I guess. Yeah. And then the last thing is it's cheaper to build. Right? And I guess that's always a surprise to people, but there is efficiency. Effectively, we think there's about a third, on a £1 per megawatt basis, we think that's about a third cheaper than you would get for a 102-hour system for the size of system we're getting. So from a CapEx perspective, it's cheaper, but it also brings other parties to the table. For people who are lending to us or doing route to market agreements, unfortunately, it's the same amount of effort for a small battery as it is for a big battery. But, you've obviously got a lot more revenue potential for a larger scale. So we think that there is economies of scale.
And we saw this in Italy with the Maxa, seeing very low sort of cost of batteries coming through as they were procuring around 10 gigawatt hours in one round. It seems like there are some similarities in there as well. Yeah. And maybe just when it then operates, do you see the site operating in a different way to smaller sites when it goes live, or like how do you see the site operating?
I think that's one of the good things about it being split, is that you can adopt a different trading strategy or a different route to market strategy. And, as a trader, I would always profess your best with a mixed hybrid approach. Mm-hmm. You don't put all your eggs in one basket. And if you've got a smaller scale, you've got to really commit to how you're trading that unit. Whereas we've got the flexibility to do different things across different units. And that's what we've done. So we went out to the market and looked at what sort of route to market do we want. And we've contracted 4 of our 5 units. And we had to do that in reality. We had a target of 50% in order to get debt finance, right? Because, lenders want security. They want to know that you can pay your debt. So we targeted 50%, and we achieved that by contracting 4 of the units. And we did that by tolling 1 unit and doing 3 floors. And then we have 1 which is currently fully merchant, but we have not contracted with an optimizer for that yet.
Okay, and so for people kind of listening to this and trying to get their heads around a little bit of these structures, so with tolls and floors, you're essentially providing some revenue, so either a lot of revenue certainty with the toll or some revenue certainty with the floor. That means for financiers, there's just much less risk in the project, so they're much more willing to sort of lend you the money and potentially a higher portion of the money required to actually go ahead and build this.
Yeah, that's exactly correct. I think you had Louise Dalton from CMS on the podcast, actually, and she supported us through our route to market, but she did an excellent job of explaining the different route to market strategies and how complex they can be.
She does. She will love to have a mention. It should also be said that's a bumper edition for anyone who really wants to get into how tolls and floors work. But if that is something you're interested in, then please do check out that episode. I suppose, we'll come on to the route to market bit in a little bit more detail. I suppose the size of the site also brings through some other interesting aspects in that not just on the commercial side, but also on the operational side, the day-to-day. Once that site is now live, like an old power station of the past that had people on site attending to stuff, because you're at such a large size, will you have an element of it being a manned site?
Yeah, I think that we will be the first to do that. So we've approached that strategy just like a large-scale traditional unit. So we will have a team on site. We're interviewing now. We've advertised lots of roles, but basically we'll have a 24/7 site. We will be, for those in the industry, will be the control point. We'll be the hub where people can pick up the phone and they get direct to the Thor Marsh battery site. So that will be 24/7. We'll have our own maintenance teams on site. We do have a partnership with Sangro, who are a battery supplier, and H&MV, who are an electrical supplier, and they will support us through the first 2 years, but we will have our own on-site team, which I think will lead to better battery performance, better approach to maintenance, and all those good things that you get.
Yeah, I think I agree. It's unusual just because lots of other sites haven't got there because they've been in the 10 to 100 megawatts.
Yeah,
I think
absolutely. And it doesn't make sense for sites of that size, but for our scale, you can't leave that as a satellite station. It doesn't make sense.
Agreed. And I think hopefully to give people some context, so today is the 29th of October. The largest site in GB for a battery is Statera's Thurrock site, which is a 300 megawatt site. So we are looking at something which is 4 and a bit times larger than the current largest site right now. I'm sure the Thurrock record will be broken before we get, yes. I think, by a CIP project coming through, which is 500 megawatts. But this, just to give people just a sense of the scale of this, it really is quite remarkable. Yeah. Just to focus a bit more on Thor Marsh. So as you say, the site is an old coal-fired power station. In terms of the land that's available from a coal-fired power station and the things that come with coal-fired power stations, is this sort of occupying a fraction of the coal-fired power station land, or is there much more room to go into on the Thor Marsh site?
Well, it's not actually even on the coal station land, so that's actually alongside it. It's actually on where they would have put all the ash. So it's on what they call the ash fields right beside it. But one of the best things about the location is it's right beside the substation. Okay. So, you've got existing connection. There's no need for National Grid to do reinforcement work or put in, and that really reduces the risk for our project, substantially on delivering it on time. There being delays. We haven't got that same risk. So one of the best things about that location was its proximity to the connection where you can actually get your megawatts out onto the grid. And the other thing is it's about the size of 44 football pitches, I think is probably the size approximation. So it is huge. So one of the best things about it is we have built into our strategy augmenting, which effectively means, if as your battery degrades every year, you see this decline in its maximum output, maximum import. And what we do is we then come in and we add more cells and what we call augmentation, and we bring it back as close as we can to its day one capacity, and then it begins again. So we've got room to do that. The other thing, we probably have room to go to 4 hours or even beyond that on each unit. Okay. If that becomes the optimal strategy, we've got the space to do that. And that was a real plus when we looked at that site, because it's just, you're not restricted. I mean, for example, we're participating in the Ofgem long duration energy storage for our final unit. So we would move that from a 2-hour unit to a 10-hour unit. Obviously, we've got to see how that process goes. But as an example, we've got the space to do that.
Yeah, I think it's a really, really nice story around how you can use existing infrastructure to bring forward projects on time and at low costs. At times when we're looking at huge network upgrades all over the UK, these elements of where can we use some of these existing connections are some of the clear and obvious wins.
Yeah, definitely.
I suppose there is an element of, you do have to, though, be a very skilled player to be able to do that. So these old coal sites are not absolutely standard. Obviously, they have had a coal site on them, and so there must have been, you've had to work with some very skilled contractors, I imagine, to be able to get to a point where this site is appropriate and sensible to progress.
Yeah, I mean, that is not my area, but I would say that we've had a team that we've worked with before. We've built power stations with them before. We're very lucky that we've been able to use those same relationships and then build new partnerships with people like Sungro and HNMV to give us confidence that we can deliver it. But yeah, there's been a huge amount of work done with the neighbouring nature reserve. How do we preserve that, make sure that we're working well with our neighbours and the communities, and we haven't had any objections through our planning process. So for us, that's good and something we want to make sure that we continue.
I feel the local neighbours would see the progress from a coal site to a battery site as progress, I hope.
Quick break. If you listen to this show, then you probably work in energy. And at Modo Energy, we're not just talking about the energy transition. We help our users to actually make it happen. All energy storage, solar and wind assets on the global balance sheet need to be valued and benchmarked. And that's where Modo Energy comes in. Our benchmarks and forecasts are transparent, bankable, and trusted by the world's leading banks, asset managers, utilities, and developers. So if you want to learn more, go to modoenergy.com. And if you want more content like this, sign up to our weekly dispatch newsletter. Enjoy the conversation.
Okay, let's move on to the commercials. So, as you said, you have one merchant, 3 floors, and 1 toll in place. Have you looked to get those with one single party, or have you spread that out across multiple route to market providers?
I think it's probably important to say on the first stage is that you have to make sure that you have a robust counterparty, because you're using that to facilitate debt. You've got to have a bankable counterparty. So that's key, and you've got to have someone who's established in the market. But no, we have taken the approach that we would like a diverse set of optimizers, and whether that's under a tolling arrangement where they've got complete control over what they do. To your point earlier, they pay us a fixed fee and we say that battery's yours to optimize how you wish, to a floor, which is much more of a shared strategy of how you optimize the battery. But even that gives us that diversity of revenue streams from fully merchant, all the risk is with us, to your floor structures where you're protected by them guaranteeing an absolute minimum, and your tools where you're basically just handing your battery over and you're capping what you can really earn from that. So we've contracted with Fidra Energy, Statkraft and EDF. So those are our partners for our route to market so far. But it's worth to say we're also out looking at our next project already. So we've also trying to expand our counterparties there as well.
Very good. And of course, feel free to get in touch should you want to offer those offtake agreements. I suppose you now have looked at some very large agreements, and you've looked across sort of multiple blocks of those. It's easy sort of from outside of the industry to look at those and say, well, all floors are probably the same and all tolls are probably the same. So you just got to line them up in an Excel sheet, pick the top one and off you go. How much difference is there between those arrangements?
I so wish that was the case. The thing is, every single counterparty has different commercial priorities. You've got counterparties who are trying to balance their retail or win positions with battery storage, or you've got people that are offering services. They're just trying to build their portfolio. So again, I would say that the legal chat is extensive, but it always comes down to things like force majeure events, termination events. How do you measure performance? It is very different. Each one you wish that you could just say, that's my floor, that's it. But it's not. It's a very complex. I mean, to give you a feel for it, I think probably to do those 4 agreements from starting negotiations to executing probably took 12 months.
I was going to say, that was going to be my next question, right? Which
Yeah.
is like, people think that it's sort of a standard agreement you can get. But yeah, as you say, 12 months from start to finish. That is why we don't see so many coming through, because it is much easier to get that merchant agreement. I think from a trading background,
absolutely,
a merchant agreement you can probably get through a risk committee in a week. And
the other thing I should have said earlier was that it's the length of our contracts. So we're 7 to 10 years.
Okay.
So if you think about that, that's 7 to 10 years from COD. So that's from when that battery is commercially handed over. Then you've got 7 to 10 years. So to your point, that is a long-term hedge or a long-term product that they're selling.
And we've walked into acronym bingo with COD. What does COD stand for?
COD is commercial operations date. So that's the date when your battery has been tested, checked, verified, compliant with all the relevant codes, and it's handed over to say, okay, it's ready to be operated commercially.
Are you, just with your commercial background, are you going to be, I imagine you're going to be sort of red hot in terms of what is going on some of those battery sites, considering your trading background, you're going to want to see exactly how they're traded on day one. Am I painting an unfair picture?
No.
No.
Okay. Actually, that was a bit of a change as well, because not on the tooling, that's hands off, right? That's none of our business what they do, because that's the deal. But on floor agreements, that was quite a change for floor providers, because they were used to people saying, as long as you meet certain metrics or if there's benchmarking, but we were like, no. We want to talk about it we would have probably for every day, we'd have been like, we want to be talking about what you're trading, how you're doing it. Do we like it? So I think that, and obviously we've got to get there, but I think it will be much more of a joint approach. So we'll have a commercial team, we'll be looking at what those batteries are doing. Is there different strategies you can deploy? So we'll be challenging those optimizers all the time about what they're doing and why they're doing it.
I wanted to ask about that merchant one. So is that merchant one, you're looking to optimize that in-house sort of as your own project, or is that being done with a third party as well?
Well, I guess the first thing is it's in the long duration energy storage process. Okay. So we won't be doing anything until we find out what happens with that. But I think, no, we will not in-house that trading. We will go to an optimizer. But we won't have the same criteria. Because it's fully merchant, we can look at all optimizers. They don't need to have larger balance sheets, credit backed, and we can go for a much shorter tenor, 1, 2, 3 years probably maximum. We won't be looking to do a 7 to 10 year deal on a merchant. We want to give ourselves maximum flexibility. But no, we will be going out to an external optimizer.
I know from the Modo side, as these big sites come on, we get very excited and we start to sort of look and see how they're trading and see whether it's different. So yeah, very excited to see that that site start to come online in 2027. Maybe just moving on to the supply chain and EPC, 1.4 gigs, 2.8 gigawatt hours. Is that a sort of a shock to the system for how much BESS can be deployed? Obviously, you said you've partnered with Sungrow. Is that something that has Sungrow creaking at the seams trying to get it done, or is that very much sort of par for the course in a global sense?
In reality, it was the opposite, because what we found was people wanted to get involved in big projects. And again, I guess similar to we talked about, the amount of effort involved in these deals and negotiations, actually to be doing the size of the deal for Sungrow, this is a really good option, and we had a lot of competition. So we're really pleased that we've chosen them. And, we will partner with them on our West Barton Sea project as well. And so it is really good that we've established that framework. And our team have been out to visit their factory where the batteries are manufactured. I mean, it's all really positive. And no, we don't think they're creaking at the seams. We think they have more capacity to go. And yeah, it actually made the opposite different. And it was the same, by the way, with lenders, right? Lenders and route to market. Because it's something different, it attracts people in to that project because they know they're doing a bigger ticket size for the same amount, roughly the same amount of effort.
And then just on the Sungrow, we've talked about batteries. I assume that the Sungrow is also providing the inverters that go with.
That's right.
Yes. Okay. Just to clear that one up. Okay. Great. So beyond Thor Marsh, what's next for Fidra?
So we've got West Barton Sea, which is adjacent to the gas station that we used to own. It's a 500 megawatt 2-hour project. It's clearly not the scale of Thor Marsh, so we're well underway. We hope to reach financial close in Q1 next year. So we're busy. We are taking the same model, right? So because it's very quickly afterwards. It's not that we'll always adopt that, but for West Barton Sea, because it's so quick afterwards, we'll adopt the same model. We're looking to contract those units. We're splitting them into two 250 megawatt units. Yeah, so it's all go.
Exciting. And when might that connect?
So that is, you always catch, that's 2027 as well, but later.
So it might be just sneaking in at the end of the protected connections reform
Yes,
element.
so both Thor Marsh and West Barton Sea are, they have protected status.
Okay, very good. And so then going beyond those two projects, you mentioned a little bit actually earlier that you were looking at Europe as well.
So we've got Bicker Fen, which is a development project in Lincolnshire. So we've got that one, but we're also looking at acquisitions in the UK. I should have said back at the beginning when we raised our new equity, one of the really, really good things was that we brought alongside EIG the National Wealth Fund. So they have a 45% stake. And obviously, for us, that was hugely positive that, they see battery storage and they want to invest in it. So they've come alongside. So I think that for now, for the next 12 months, it will be a focus on UK and acquiring ready assets, we could even consider operational depending on where they are, but we will look to grow our portfolio in the UK over the next 12 months and then to the EU if they can meet the level of returns that we're looking for.
Okay, super interesting. As you grow that portfolio, I feel like there will be a natural tendency to you to want to feel like you can bring this in-house and at some stage be sort of an independent optimizer or also sort of a standalone optimizer of your own units. Do you think you'll ever go that way, or do you think that you kind of see the value of those third-party optimizers?
I get that question a lot, as you can imagine. I shouldn't say anything terrible, but I spent lots of years having lots of traders and it's hard going. But I would say that there's definitely got to be a point at which it makes sense. But I think it would be wrong to underestimate how much cost, effort and people and systems you need to in-house that. And if you think about our current arrangements are on 7 to 10 years, there's a complexity in in-housing and also having floor agreements. And so never say never, but I think we've got quite a while to go.
And I think maybe I'll have to provide a bit of numbers from my side for this, because I know yours will be commercial. But if you go back 10 years, when you thought about sort of third-party optimizers and off-takers, the percentage that was shared to the optimizer generally tend to be a little bit higher than it was today. And so there was kind of more incentive to try and take stuff in-house. Now, because we have so many optimizers, they can be really competitive processes. And so just because that profit share that goes to the optimizer becomes much smaller, the incentive for someone to kind of bring stuff in-house is less. So again, I sort of makes it harder for third-party optimizers, but also great to see that competition in the space.
Definitely.
One to certainly watch. Okay, I'd like to move us on to our final two questions. So the first one is there anything you'd like to plug?
Well, I guess we're building the biggest battery. So we're really excited about that. And, we might as well make the most of it while we're still the biggest. The other thing is we're hiring. So we've got a lot of roles out there. So I guess I'd encourage people who are interested in being part of the biggest battery that they look at our website and, get their CVs into us, because it's going to be key that we get the right people.
And it's going to be a whole range of roles, right? So from some commercial roles within sort of HQ, but also, as you said, roles on site as well.
Yeah, commercial roles, finance roles, HR roles, generally based in our Edinburgh office, which is where our head office is. And then, as you say, the site-based roles, which will be full-time based at the Thor Marsh site, and then subsequently at West Barton-Sea. Okay,
and on to my final question. Is there a contrarian view that you hold?
I think we should stop talking about skip rates.
Oh no! Don't tell me that.
Yeah.
What do you mean by that?
So I think that skip rates have always existed across all technologies, and I think that I understand that there's been an issue with smaller scale being skipped and I feel like NESO. Have done a lot of efforts around the open balancing platform steps they've taken. There's a new grid code change that they're putting in more parameters. So they are trying to move their systems to keep up. But I think that it's fair to say that one thing that NESO do very, very well is keeping the lights on. Mm-hmm. And to do that really, really important job, they need to make decisions that are not always popular, and they're not always following a set criteria. I'm all for transparency, but in reality, they need to make the decisions they need to make at the time. And I think sometimes we need to trust them to do that.
Okay. We could roll this conversation on for much longer. But I think that's an excellent contrarian view, because I think many people in the battery space do have their eyes on those skip rates all of the time. And I think that's an excellent place to leave it. Lisa, thank you for coming on. You've been a fantastic guest.
Thank you very much for having me.